All right. Hey there, everybody. Christopher Franks with Texas West Capital checking in with you live here, 11 a.m. Central Standard Time here on Tuesday, the 21st of March, 2023. Again, coming at you live here from just north of Houston, Texas, Lake Conroe. Another cool day, man. I tell you what, we've been down our evenings. Y'all probably some of y'all are gonna laugh, but yeah, our evenings have been, in the 40s and whatnot. Been a lot cooler here than what we're used to. Days being up in the 50s maybe. But we got those 80s coming back, and we'll all be complaining about that heat here soon. So it is what it is. Don't forget to hit the likes, subscribe to the channels, all that fun stuff, guys. We got some stuff to talk about today. But first off, let me go ahead and remind you guys that, Fiboswani usually joins us every other Friday. He's got a prior engagement this Friday, so we'll be rescheduling. He's going to, don't worry, he's going to continue coming on, right? And we're going to try and start getting more people on, maybe do up the show a little bit different, add some stuff in, maybe make it more times a week. Lots of changes coming up, guys. Lots of things we're doing as we continue to hopefully do what we do even better. So good to see you guys checking in. Man, oh man, we got stuff going on, right? So we've got the FOMC meeting that starts today. We get the rate decision will be broadcasted tomorrow, right? So everybody's kind of waiting on that. Are we going to stay flat? We're going to get 25 basis points. We're going to get 50 basis points. We're going to get a surprise negative. Are we going to have a 25 basis point reduction? I don't know that it goes that far. I'm still kind of sitting in the idea that we're going to get 25 basis points. So that's where I'm sitting. Let me see here. What does the CME thing say here? Let's see here. Yeah. So the CME Fed Watch tool, guys, it's target rate probabilities for this March meeting, 19.5% at flat, 80.5% at 25 basis point on that hike there. To me, it seems like it is probably the most likely thing to happen. I don't know. I think there's a lot of talk, the Fed has to be aggressive and whatnot because the ECB just raised 50 basis points. But man, I don't know. Especially if the Fed isn't sure how the financial system is at the moment. I think that could be a dangerous approach. 25 basis points says, hey, listen, we're not scared, right? But, at the same time, kind of gives them some wiggle room to kind of wait and see what's going on. I think they need to stop? Yeah, I think they've really just overdone it. We're just barely starting to see any effects that happened at the beginning of the rate hikes last summer, guys. Those 75 basis point rate hikes, we have like 4 in a row. So I think, again, all the other information other than the seasonality here at the beginning of the year, shows that everything's been dropping. And even that's still dropping overall off the peak from, midway through last year or almost a year ago, depending what metrics you're looking at. So, yeah, I don't think the Fed needs to keep on doing this. I think, it was all big. It's just been handled really poorly overall. I think Hank agrees with me on that. Let me see here. Who's here? Kimasabi, Hank, Fiboswani, good to see you. Fiboswani says he's going to miss y'all, right? Do any of y'all believe that? See, look, he said, I will miss y'all. So we'll see. He's talking about this Friday when he's not going to be here. Brian Riley, good to see you. Brian says 25 basis points would be good for risk on. Yeah, again, that would be kind of in line with the idea thing, that the Fed is slowing down and, markets are always forward looking. So I think it would be good. Yeah, definitely for risk on. Kimosabi says, talking about the ECB says, man, the UK 100 looks macro reversalish. I can't even barely say that, right? Hank says 25 basis points with the dovish presser. Yeah, again, I think that's the way you do it. If you're going to raise anyway, I think that's the way you got to do it, right? But we'll see what happens. The Fed is notoriously doing things that we don't believe it should do anyway, right? It's just like it does things and then keeps it going worse, right? It's like, here, let's create a wound and then let's pour salt on that wound. I think you guys agree with me there, right? Hey there, Data, Ilya, good to see you guys coming in. Let me see here. What else do we got coming up? So we've got that tomorrow. That'll kind of set markets on the way, at least for the next few weeks. We'll talk about something here with Bitcoin. Things I've been talking about for since last year, guys, as far as this rally off that November low. We'll take a look at that and potentially what a 25 basis rate point hike would do for that. Mark, what's going on? Moto Ranch, good to see you. Spiral Architect as well. Yeah, the Fed panicked. I mean, it's what they do, right? It's always reactive. And then usually that reaction is overstated, right? So this is nothing new, nothing we haven't talked about consistently, right? They don't want to lose face with 0 base point rate hike, with a flat rate, basically. Ilya thinks. Yeah, I think they just I don't really think. So here's my thing, guys. Again, I think, inflation's topped out last year. It's been coming down. It's going to continue to come down. So I don't think they're really in this hard position. Everybody's kind of putting this narrative as, okay, does the Fed have, they have to decide, are they going to hike or are they going to, look weak, and I don't think that's what it is. I think, I think inflation's kind of done its thing. And so I don't think really that's a hard decision to make. Now, maybe in some of the Fed members' eyes, it's a hard decision to make because they think they have to do more. But realistically, if the Fed steps back, I don't think they really have to. It's just, okay, well, we'll just kind of slow down that rate hike once more here, give it some time to play out. Why? Because it's all about liquidity, guys. Same thing I've been talking about for a while now. Everything's about liquidity, right? So what are we talking about? Well, okay. So you have, SVB Bank there, you have Synchrony, you have all these collapses, right? These banks that had to get taken over. You had Credit Suisse that just got sold to UBS. I think ultimately it was $3.2 billion. I know UBS came in and said, hey, here's $1 billion. And they said no. And, Swiss National Bank comes in and then, Swiss government comes in and then it's like $2 billion. And I think it ends up being like $3.2 billion, right? But here's the thing, a lot of people are worried about this because they're thinking in terms of 2008, right? So we had that great financial crisis because the banks were, they had all these really cruddy loans, these subprime mortgages, stuff like that, right? And so when you look at that, that was the issue there. Here, it's just a confidence issue right now. Now, it's not to say the confidence issue can't, turn things pretty bad. But right now, the banks, what's going on really with depositors is more of a confidence issue in the banks. And so you're seeing them pulling out of some of these regional banks and, putting into things like BOA. I think BOA had something like 14 billion inflows or something. Schwab was getting taken to the cleaners, and then they just got some, I guess recently here, just got a lot of inflow. JP Morgan, again, we talk about the big four banks, probably the ones that are going to benefit most out of all this. As you get more consolidation, Yellen's talking about, well, maybe we'll go ahead and, kind of work on that Glass-Steagall Act again and make it, once again, where your commercial banks and your retail banks can't be combined, Remember, they took that out there, Republican Congress and Clinton revoked that part of it back there, 98? So, we'll see how all that goes, right? So it'll be interesting. But right now, apparently the Fed's saying that the smaller mid-sized banks are starting to stabilize. Okay, they've got this bank term funding program that we've talked about. That was they had the quick backstop into the SVB thing, and then they right after put this bank term funding program. Now the bank term funding program, guys, all that's really doing is that they're going to offer loans if you need it, right? Up to 1 year in length, and these will be to banks, savings associations, credit unions, and other eligible depository institutions. And basically the way it works is they're going to pledge their whatever treasuries they have, their agency debt, their mortgage-backed securities, other qualifying assets as collateral, and they're going to get their loans with that asset valuation at par. So the big issue with SVB is they had to take a $1.8 billion hit when they had to rush and sell off those treasuries they had. to fund the deposits, the run on the deposits, right? So the idea here is, hey, instead of having to do that now, guys, you can just come on, take a year loan with us. We're not going to charge you anything for it. We're not going to, there's no fee or anything for it. We're going to value your assets at par and get you that cash so that you can get the depositors their money. And so that's the whole idea of it right there. So it's nothing overly exciting. It's just like, hey, listen, we're going to, instead of whatever the value of your bond is at this particular time, we're going to give you actually par value for it. So, that kind of gives the Fed some wiggle room with interest rates and whatnot. But the problem is, everybody's thinking about that. They think about just the Fed and their interest rates in terms of the banks, right? But still, if the Fed continues raising the interest rates, it's going to cause, more damage to everybody else, right? And that in itself, I think, can cause an issue with the banks. So, if you think it just in terms of the banks, you go, okay, well, now we're backstop their deposits kind of. And so now we can continue raising. I think you kind of miss the forest for the trees, right? So we'll see how that all turns out. But that's kind of what's going on right now. Hey there, Derby Bound. Thank you for joining in. I appreciate you showing up here. Let me see here. Who else has showed up? Mark, what do you say? Good old banks? Oh gosh, Hank, I misread your comment here. Hank said banks are companies too. I thought he said are people too. Either allowed to fail or we nationalize all of them. And I feel the same way. And that's kind of, I think, the bigger problem is, the Fed and other central banks can come out and say, oh, this is just a one-time thing, or it's just these couple we're doing it for. But if you do it for a couple, you got to do it for more, right? And the problem with the bank term funding program is kind of this idea that, well, it's meant to be this short-term thing, right? But anything the government does usually sits there forever, right? Sits there in perpetuity, right? So, if you think about the reverse repo functions and stuff like that, I mean, this becomes a mainstay of things, last few years. So it's just kind of crazy how all that's working, right? Baltazar, Toby, good to see you guys. Let me see here. Hank says, what'd you say here? 0 basis point rate hike would cause a panic too. Yeah, I'm not so sure it would cause a panic, but yeah, I think it would be pressure. People might look at the Fed maybe a bit kind of like, oh my gosh, you guys are worried, right? But, again, what does the Fed do? We've always talked about this, right? The Fed has to maintain whatever it wants you to view it as, right? So its mouth is the big thing, right? What it does, it doesn't want to have to do the things that it says it's going to do, right? It would rather use its mouth and get out there and get you to either be more concerned or to be more confident, depending what the situation is, so they don't have to do the things that they say they want to do. Because I don't think the Fed really believes that it gets a lot done with what they want to do, right? So, yeah. Yeah, exactly, Hank. Nothing is more permanent than a temporary solution. That's right. So, yeah, that's what we're kind of looking at there, right? And so then everybody's going, okay, well, now they're talking about swap lines. And so the Fed's opening up these swap lines. Swap lines are used to be weekly. Now they're opening up daily through, I think they said the end of April at least, right? Everybody goes, oh my God, they're going to create all this new money. It's not about creating new money. A swap line just basically makes it easier to swap those currencies. And it's central bank to central bank. It's not like the U.S. Fed is going to, the FOMC there, the Fed, is going to just give money out to Credit Suisse or something, right? It would be, to things like ECB, Bank of Japan, stuff like that. And all it does is it keeps the liquidity. See, again, we're talking about the beginning, right? It's about the liquidity. It just keeps the liquidity going. So that way, because, they realize that what they're doing, I think right now their balance sheet is like down 8%. But it's still double what it was, down 8% from its peak, but it's still double what it was prior to the pandemic, right? So there's a lot of extra cash flowing around, and they're trying to soak that up, with continue with the QT, right? But they also recognize that doing that takes cash out of the market and whatnot, and so it makes credit tighter, right? So your banks also have to be concerned, right? Because listen. Dollar creation actually happens at banks, right? You guys understand that, right? The Fed, just because the Fed prints a dollar doesn't mean it does anything. Okay? it either gets traded to the U.S. government for treasuries, right? A swap, right? To get that in there, or it goes through banks, right? Through their fractional reserve banking, right? And so it doesn't go directly to you. That's against the law. The Fed cannot give you a direct payment. Now, Congress could come in someday and say, hey, listen, we give Congress, we give the Fed the ability to do this. And something like that's been some people have discussed when you talk about UBI, right? Universal basic income. You talk about the CBDCs coming out, stuff like that, the digital dollar, how something like that could maneuver into it. But yeah, I don't know. That's just that thing, right? But what the swaps do is, even with the central bank kind of tightening, it allows other foreign banks, other foreign central banks to have dollar liquidity, right? So basically, they say, okay, what's the par rate today between, USD and the euro, right? And the ECB says, okay, well, we need, 200 million US dollars. So they transfer at par, the equivalent in euro to the Fed. Fed transfers the dollars to them. And it's just a swap, basically, right? And so, like I said, it used to be for a week. Now it's for a day. And that's to help, because what have I told you guys? The Fed is most concerned about keeping the wheels greased in the global financial system, right? The USD is such a big part of the overall global financial system that if it seizes up, right? If the dollars stop flowing, then the system seizes up. Again, I used the analogy before of an engine and oil, right? The USD is that oil. The global financial system is the engine, right? And so the idea is to keep the liquidity flowing. That's what they have to do. And so then the ECB gets the 200 million, and then they give the terms of which that they loan it out to whatever banks or whatnot. But again, we went from weekly swap lines now to daily, at least through the end of April. Again, the idea being that it eases other central banks to have those US dollars in there. Okay. So that's kind of what we're looking at there. So, don't take it, people see the balance sheet increasing and stuff like this. And you just have to understand how it all works, guys. And it's nothing that's simple and quick and easy to get done. But basically, a lot of what the Fed does is just moving markers around on their books, right? I mean, that's really what they do. They deposit something here, they take collateral over there, whole kind of idea, just to kind of really make it oversimplified. So don't just assume just because, everybody's pushing around, they increase their balance sheet this much all of a sudden they're printing new money. They're not, printing new money. They're just moving things around, right? They're doing swaps and, and collateral and, loans and whatnot. Now, this could still lead to them printing more at some point, but right now that isn't what's going on. Okay? Understand what I'm saying there? I appreciate that, Deadly. It says, if you aren't tier 3, sign up. The information made available to you daily is not something you can put a price on. If you understand the information presented to you, trade safely, everyone. Appreciate you, man. Yeah, Hank here is saying that I think he's talking about the Fed here, are literally the bank for banks and other financial institutions. Yeah, exactly. Again, even though the Fed actually prints the dollar, right? Again, guys, remember, it doesn't get out into you and me until it either goes through a bank or it goes through the U.S. government. Now, again, we're not even going to discuss, I've talked about it a few times, I'm not even going to get into the whole euro dollars, right? That's that whole dollars offshore that the Fed really doesn't have they don't have any control over, right? So if you get a dollar here, right, in the U.S., the Fed can see what it's doing, right? But if it goes over to, say, some bank in Singapore, well, now that bank can then do fractional reserve banking on that dollar, of which the Fed is not privy to, right? Kind of idea, right? So when you're looking at euro dollars, you have this idea of a general kind of idea of how many may be out there, but nobody really knows for sure. So how many US dollars are really out there? We really don't know. Once they're offshore and getting, fractional reserve banking in other countries, it gets crazy, right? So yeah. Let me see here. So yeah, so we've talked about that now. Let's see. What else we're going to talk about? Oh, real quick here, man. FTX influencers, right? That $1 billion class action lawsuit over alleged crypto fraud promotion, right? Let me see here. So again, you've got people you may have heard BitBoy out there talking about it, right? He says he never got any compensation, never even had a ref link, whatever, with all that, right? But there are other ones who may have, right? And so basically, the idea of this class action lawsuit, and by the way, it's not just U.S. people. There's people from Australia and other countries as well. But the idea of this is that they, what does they say? They said, though FTX paid defendants handsomely to push its brand and encourage their followers to invest, defendants did not disclose the nature and scope of their sponsorships and or endorsement deals, payments and compensation, nor conduct adequate, if any, due diligence. Now, obviously, this is one thing I've tried to explain to you guys over the years, right? Just because there's a court case, doesn't mean it's truthful, right? What you got in this case is you have them filing saying, listen, they're all paid, they're all paid. Now, they may or may not have proof that they're all paid. So they might have to go through things like discovery and get, paperwork, whatever, given to them so that they can maybe find some way. And of course, defense will be up there and say, hey, you can't go fishing, you need to bring down the scope of what you're asking for in discovery, because other times usually what you're going to try to do is you try to get the other side, to disclose as much information as possible in discovery. And so the other side is usually saying, listen, it's too big because you're not allowed to go fishing. As I said, here in the US, you can't just have them give you everything and then look for stuff, right? The idea is you're supposed to have this, you're supposed to be able to pretty much prove this already. But anyway, so the idea is that they all got paid by FTX. And then the idea of the disclosing the nature and scope of their sponsorships, blah, 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 is all about, I think it was 2019 and the SEC. See, I think this is the problem here because they're saying, listen, the SEC through its actions has kind of said this is the way things are. But the SEC, of course, has never come out and really said, these are securities, these aren't, right? So I think that's going to be a tough part in their case. They're trying to say, listen, through the SEC's actions, they're basically saying, without actually saying it, that these interest-bearing accounts that we got on FTX are securities. Therefore, we can sue for that reason. But they're going to have to prove that. Again, they're going to prove it to the court where the court says, okay, I agree with you. I don't think this is anything gets itself, finished anytime soon. I think the lawyers are all going to make a lot of money is what it is. The problem with getting sued, guys, is even if you didn't do anything wrong and you have to defend yourself, it costs a lot of damn money. It does, right? Hank brings up the point. He says, let me see here. What'd you say there, Hank? You said it's almost verbatim the same suit as the same people, same lawyers brought against Brady. Throw it at the wall and see what it says. No, yeah, that's the idea. This suit is those few cases, the Tom Brady and all that stuff. It's like it's the bring together of all that. It's a class action lawsuit. So that again against Brady and them is all part of this, right? So that's what they're kind of looking at on that. Let's see here. Aeroquin, what's up? He said, if you know who Stephen Graham is, he had a YouTube show that had FTX as a paid sponsor. I'm sure a lot of their viewers got burned. A paid sponsor, again, a lot of it's going to depend on how that actually comes out. Were they just advertising? If their paid sponsorship, was just advertising versus actually being a sponsorship, I think there's a lot of wiggle room potentially in there. But yeah, we'll see what happens. I think this class actions are notoriously difficult to win. They're notoriously difficult to even get together. They're even more difficult to win. And in this one in particular, they're really kind of, I think, stretching out a bit here as far as reaching for it. Again, talking about what the SEC deems a security, stuff like that, right? So, we'll see how it goes there. But generally, guys, the one thing you need to understand, at least here in the U.S., is lawyers do not, a lot of times we think, I've been wrong, so I need to get a lawyer and sue. And then you'll find, oh my God, I can't find a lawyer who's willing to represent me. Well, it's because lawyers aren't willing to go after people that don't have money. Okay. And the reality of it is most of your wealthier people out here in the world, they put things in trust and whatnot. They don't actually own anything, right? The trust owns it. They're the manager of the trust. And in that way, a lawyer, what's the lawyer going to get? The lawyer can't touch the trust. So lawyers look at that and they go, well, shoot, I'm not going to make any money here. I'm not going to do this, which makes sense, right? Because law, especially here in the US, is very expensive. You got experts and all this other stuff. You got to pay people for their time. It's just you don't want to, guys, I'm telling you right now, that's why most people tend to settle outside of court because it's just too much of a hassle. And it's always a crapshoot. I don't care how good you think your case is. Absolutely anything can happen in court, right? So, yeah. Hey there, what's up, LXT? Good to see you, man. So, yeah, they're coming up here. We'll see how that all turns out. I don't see that they have a lot of, right now, potentially a lot of real support behind them in their case. But we'll see how it continues to play out there. So, man, oh, man, that's what we got going up. Again, we got the FOMC meeting today and tomorrow. We've got the rate coming out tomorrow. So we'll check that, right? You forgot, LXT forgot that we're currently just 5 hours ahead instead of 6. Yeah. Again, try to remind you guys of that, but we had our stupid daylight savings time thing, right? Okay, let's jump over here. So what are we looking at? Here's kind of my account at the moment here on Bitcoin. So I'm still leaning towards some potential upside because we haven't really got anything saying, hey, we're going down yet. So this is what I wanted to talk about. Let me see if I can find a better chart on here. Well, yeah, I guess I can look at this right here. All right, this is a Bitstamp chart. The other one's Coinbase, of course. But remember, so I've been talking about the idea down here, right? I said if we impulsively break out above the weekly pivot, most often what we do is we'll rally up to the R1 pivot area. Okay? Now that R1 pivot is up there around 38, 39,000. Right up here, toward the top of this kind of resistance up here is getting around 45, 46,000. Okay? So, sorry guys. I didn't put it over. I got to get used to this. There we go. All right. Thank you, Hank. Appreciate it. And LXT. Oh, man. Okay, here we go. Let's try this one more time. So, as I said, you guys are messing with me here. Excuse me. Hey, Baltazar, man, I appreciate that, buddy. Said I'm good looking. You like a glimpse of the chart as well. All right, guys, listen. So I'd been talking about here, since we were down here, right, and talking about when we got the pivot, the weekly pivot coming up at the beginning of the year, we'd have to look at it, right? And the idea would be that if we got an impulsive breakout above it, which we do now, right, and we closed above it, most often what that leads to is a rally to the R1 pivot. Now, that'll get you up there around 38, 39,000, right? A little bit higher up here, get you around 45, 46,000 at this next level of real resistance. We're looking at this right now is 1, 2, right? So this is 1, 2, 3, 4, 5. 1, 2. It's like a 50 or 61.8 pullback right here. Let me see. Kind of zooming in here a bit for you. Yeah, so if we're looking here, we're almost a 61.8 pullback. Again, 1, 2, 3, 4, 5. So that gives us a 1, a 2. So we'd be looking for a rally up, right? Yeah, but Hank says the only scary thing is that this is a perfect 1-to-1 ABC. Yeah. I mean, potentially, right? We always have to watch out for that. Most of the time, and so it's funny because with Elliott Wave, we're always taught that we're looking for a 1-to-1 ratio, right? For ABC. So A wave up, B wave pullback, C wave gets you the 1-to-1, right? But usually in practice, price actually rallies on an ABC up to the 123.6. It seems like most of the time. So that's a 31.5 right there. But the idea generally is that we'll get this. Here's what I'm looking at, guys. I'm gonna put this out here for you, okay? So we've got kind of this area, right? And my thought is, if we can get another impulsive break higher here, right, what we'll see is something along the lines of this, and this, right? Now, I don't know if that's exact or whatever there. But the idea is that we'd have our 1, 2 here, right? And then that gives us, well, in this case, gives us a minimum expected 3 right here. Gives a 4 on the pullback, again, right into this. You push up through the resistance, come back and retest as support, and then rally up higher, right? So you're minimally looking like around that 39,000 area, though with my count, we could be seeing some overextensions in here that could lead it up here toward 45, 46,000. But even if we were here, let's say we make it to this 39,000 area, that would still be a 50% pullback right above the weekly pivot. So it gets you a 1, a 2, and then a breakout higher, right? If we can get up toward this 45,000 area, things become a bit more interesting there, because now all of a sudden 50% is right in this structure, right around 30,200. So basically you get a wave 1 up to around 45,000, wave 2 back to around 30,000, and then you break out higher. And that's what I'm looking for here. Do we get this big push and rally up and through here, up and through this green area, through that 30,000 kind of area there? Because that would be similar. This happens more often than you guys would probably like to admit. By the way, I've got that on. Didn't have that on log. But if we look right here, this is what happened right in 2018 at that 6,000 level right here. That's what happened right there, right? So you've got this support here, right? And everybody swore it had to break down here. And I remember this like it was yesterday. I said through it like a hot knife through butter, right? And then come back and retest. And that's what we did here, right? We broke out through it, pulled back, retested that range, and then rallied up to that June high. So I could definitely see something like this potentially happening in here. But it has to happen. I'm not saying it's going to happen, guys, but I'm saying anybody that tells you that you definitely have to go down from here and whatnot, were probably the same people telling you that it was going to get rejected right here. Okay? So you got to be careful with the people out there guaranteeing you guys. I don't care what their trading track record kind of looks like. If they're guaranteeing anything to you, either they're feeling themselves a little too much, or they know they can't guarantee you, but by guaranteeing it, they know you're going to follow them. And again, influencing makes money, right? So yeah. Let me kind of catch up with you guys here. Toby says, CME gap at 35,000, possible target. I mean, we've got multiple targets on the CME, right? I've got a CME chart here. Let me see if I can find it real quick. Yeah, here we go. So, I mean, we've got CME chart right here, right? Gap. Let's see here. That closed at 28,920, right? So there's that gap. And then we got another CME gap up here. I think this is the one you may be talking about. Closed at 35,925. Yeah. Yeah, so we've still got, those two gaps, right? And then really, I mean, even though we've got some wicks back here in December of 21, you've still potentially got, no candle spreads closing in on that. So you've got a gap up there really around 53,545. Now, that said, there is this gap by us, right? Right here at 27,000. And then we have another gap a little bit lower here at 19,965. Now, the gaps. What are the gaps? Well, the gap, the lower gap there that I just said, that 19,000 area, is a breakaway gap, right? It gaps up off the bottom here. Even though it's on the weekend, it's kind of breaking off up there, right? And then we have the same kind of thing happening on this local one here, right? They're not like the previous gap over here at 19,550 back in January, which was, again, these are all weekend gaps, right? But this one came at the end. It was an exhaustion gap, right? It came at the end of this rally up off wave 2. So, I mean, again, different types of gaps, different type of things. I don't really worry about them a whole lot in general because, usually your counts or, your analysis is going to get you there anyway. It's no use looking at that and then going, well, why didn't it go, right? So I don't really worry about a whole lot. But if you are looking at that, there are some things there to look at in terms of gaps, right? Beans and rice for me. What's up? Says, I guarantee I know nothing. Also saying what? Bitcoin pushing higher as I talk. Nice, nice. I like that. Deadly saying the same thing there. Ilya said, I've read today someone's found a gap around 1 cent. Yeah, they're going to, right? They're going to. We'll see. I don't think so, right? Let me see here. The Real Go-Go, what's up, man? Says, what'd you say here? You're visiting where? Zimbabwe today? Trying to familiarize myself with the effects of hyperinflation. Okay, all right. Well, interesting. We've got, what's his name? Oh, is it Baj? I can't ever say his name. Somebody help me with his name. First CTO there of Coinbase has this crazy prediction. This thing he's saying, or this little bet he's trying to get going here, 90 days, Bitcoin to $1 million, right? I hope you guys don't really believe that. It's not going there, okay? No, not Brian Armstrong. BAJA. Oh, I can't ever remember how to say his name. But he was the first, I believe he was the first CTO over there at Coinbase. He's a smart guy. No doubt he's a smart guy. But I believe firmly that what he's doing here is two-pronged. One is marketing ploy, right? So the return he's going to get on the virality of this bet, right, even if nobody takes it, is going to pay him so much money in the long term, right? And then the other thing being, too, getting people noticing, talking about Bitcoin. And I can't fault him for that, okay? Balaji, yes, thank you. Balaji. Thank you so much, Mr. Michaelotis. I appreciate it. Yes. Again, I hate that I always screw up his name, but is what it is. I'm white. I screw up names a lot. I try not to, but I do. But anyway, so he's got this bet going on. Listen, I'm going to bet $1 million that Bitcoin becomes, and I think he said he's got enough for 2 bets, right? He's putting $2 million in escrow, 2 bets, that Bitcoin will reach $1 million in 90 days from the time of the bet or something like that, right? And there's so many other things he could do here, guys. I mean, he could have, options contracts, futures contracts tied into this whole bet thing. He's not going to lose money on this, guys. Regardless of what happens, or if the bet's even taken or whatever, he's not losing money on it, right? All marketing, that's right. You never heard of him before the bet? Oh man, no. He's a smart guy. He's not an idiot. But it ain't happening, guys. Okay. As Fiboswani says here, that is not how markets work, right? So don't try to stay away from the noise, guys. Don't get caught up in the nonsense, okay? I know a lot of newer traders out there are wishing and hoping, and in their minds, they're like, oh my God, I only have like 1/10 of a Bitcoin, but man, if that thing goes to $1 million, all of a sudden I'll have $100,000. Don't be thinking that, guys. It's not what's happening, okay? So it's marketing, guys. That's all it is. I wouldn't worry about it at all. If we get rejected here, guys, let me pull it back up to that Bitcoin chart. Oh yeah, we broke out here. So I've got my 1-2 minimum expected wave 3 here at 29,270, 275. Secondary target up there at 29,618.50. And if it's really pushing, you get the 2618 up here at 3177 and 75 cents. We've got the slightly larger degree wave parentheses 3 target up here at 30,581. And as we continue to push up here, and then a secondary target on that one at 31,298.50. But yeah, this count that I've got on here, if this thing is working, then we would have a push up there toward the mid 40s area. So we'll have to see how it works out. It's not the nicest count coming off here, off my wave parentheses Roman numeral 2 support down here around 23,931. You got this sideways here. I've got a lot of people looking at a lot of different ways, kind of like what they did previously there, but it's a lot of noise in there. But I've got that, this wave 1 here of 3 as kind of this leading diagonal. So we'll see if we can get this continued up. If we're pulling back, I mean, just because we pull back here, guys, doesn't mean we have to go down lower. My targets, if we're pulling back, we got the 15-minute S1 pivot around 27,170. We've got the weekly pivot at 26,744 and basically that area right there. You got the hourly pivot here at right around 26,160. And then, of course, you've got the, well, I mean, you've got this hourly S1 pivot right around 23,796 or so, and then you've got your daily pivot down there around 23,262. So, I mean, those are kind of levels I'm watching. And why am I? Because of the extent of this rally and the way it continues to push. Again, it looks similar to what we saw back in. Let me get that other chart up here. Yeah, kind of what we saw back here, when we had the rally coming off the 2020 lows and how it kept pushing, and then especially when it broke out in October of 20, rallying up. The same thing, breaking out here in 2019 out of the 2018 bear market low. And again, kind of this idea here coming out of 2015 as we kind of just continue to push up. Though this had a bit more pullback, but man, these extensions, right? These extensions are what I'm talking about, where you just kind of get that continuing push and push and push. I've talked about it over the years. It's something that we often see in Bitcoin. So I'm not ready to say here, it definitely has to be a top. I'd never say definitely anyway, but man, I mean, here it goes trying to push again, right? And so if we can get that sudden breakout above that 30,000, 29,000 area, and rally up above the R1 pivot on the weekly, depending on how far up we rally there, we could just pull right back to that 30,000 area, not even get down to the pivot. And so how is this max pain? I've talked about this being max pain coming off the bottom. And have people tell me, oh, you're such an idiot. That's not max pain. The Fed's going to keep raising interest rates. That's max pain. No, if you're in this chart, if you're in this market right here, guys, everybody and their grandmother is telling you, as this rallying up here, that price has to go back down. Every time it has to. Every time it has to, right? You got these large accounts like Profit Blue and what is it, Capo, Il Capo or whatever, saying, oh, biggest bull trap ever. It has to go down. It has to go down, right? So you're new, you're out there, you really don't know what you're doing, and you're here and you're going, yeah, that makes sense. They sound like they know what they're talking about. Look, they got hundreds of thousands of followers. They must know. But it's all marketing, right? And so max pain is you're out there sitting out. You're not getting long. And this thing continues to push up. And now that it's here, you're even more fearful here at the weekly pivot than you were prior. And you're even more scared to go long now. And so it continues rallying up without you. That's max pain. Missing those lows and having it go up while you're kind of just scared to even, look at it, right? That's max pain, guys. Okay? So, yeah, we'll see how this goes here. Let me see. So, again, we'll see what happens. If we pull back from here again, we've got those targets, but again, it would have to be an ABC, which would mean that this would all be a wave 4 here, right? Which means this would be an ABC, and then 5 up. But that doesn't work, right? Because this becomes an ABC. So how does this work then? Because if we count this down, this is 5 waves down, right? So you would have to take the point that this is the all-time high is the end of the rally, 5th wave or whatever. This is 5 waves down for wave 1. A, B, C, this is wave 2, right? I mean, that's the point you'd have to take. And then that gets us, right now, we're only at the 23.6 retracement. 50% retracement is 42,000. So to me, that doesn't make a whole lot of sense. But, I mean, it seems pretty clear. And again, I hate saying that even with the Elliott wave because there's a lot of times you can get something, not correct in there, right? Maybe this is 1, 2, and this is 1, 2, 3, 4, 5. So this is 1, 2, 3, 4, 5, right? Can't say it's not. But the further this thing continues to push, of course, the more likely the low is in there, right? If you are of the type that you like, Head and Shoulders, right? I know this is Hank's favorite. Well, second favorite. His first favorite, I believe, is the cup and handle. But, if you're going to look at this, I've seen some people kind of throw this out there. Actually, what I think they did was this. I think they were saying something like this here. I mean, that's kind of where you'd have to go with it, right? I don't like the shape of that inverse Head and Shoulders. It's not very kind. It doesn't seem to really be what we're looking for. If you instead, maybe they pull it from here. I don't like asymmetricness when it comes to the pullbacks, right? You got this huge shoulder and this very small shoulder. But hey, if you're the believer that this is what's going on, then price should not pull back down below the neckline. And based on the height of the pattern, your target should be up there around 41,298, which it would be between waves 3 and 5, which is generally where pattern targets end. So if you're of the mind that this is what this is, and I mean, the breakout through the shoulder here, I mean, that would be, you've got the expansion of volume, large candle spread on the breakout, but it has to remain above that neckline. But, again, that still gets you up there between waves 3 and 5, which is generally what happens with pattern targets. So, hey, we'll see what happens with that, right? Let me see here. Now, if Bitcoin does break up from here, I would assume dominance would move towards 50%. No, not necessarily. So dominance works like, dominance doesn't just come down at when Bitcoin's done running, right? Dominance starts coming down before Bitcoin finishes its run usually, right? Because the idea is people are cycling money, their profits out of Bitcoin into other mid cap or whatever, alts, right? And so it's something that doesn't happen immediately. It's something that kind of takes a moment, right? So it's usually kind of a fifth wave type thing, right? So something to really think about that. But speaking of dominance, I've actually got a dominance chart here for you guys. Let me see if I can find it here. And then we'll move on and look at these other kind of charts I've got. Well, I can't find it, so I'm going to just go ahead and pull it up then. See, I got it. Yeah, I got it listed there. Okay. So I had this target. This is with tier 3. We update this chart weekly. I had a target up here at the R5 pivot on the daily. And now you can see we've got this pullback here. Now, from this count, it would suggest that we've got a pullback coming down here toward 43%. Right? Man, you don't even know how many tabs I got open. Don't make me open up these two tabs over here. But yeah, I mean, so if we're looking at this, right, look at what we did at the weekly pivot here, guys. Broke out, retested, boom, shot up, right? We are right up here around the wave 4 of my count, where it would be, right? And then wave 5 ends right down here, just a slight dip below wave B of 4. 4 doing a flat correction potentially here, right? So right now, my thought was, okay, we're going to pull on back. Let me see here if we bring this up. That gives you a 50% pullback to the weekly pivot, right? You rally up. So this pullback would be the finishing of people rotating out of Bitcoin into other alts. That's how I would look at that, right? Let me see here. Let me see. Let me kind of catch up with you guys here. Yeah, Hank hates Head and Shoulders and cup and handles as well. But I remember back in the day, Hank, you used to bring a cup and shoulders a lot. Cup and shoulders? Did I really just say that? Cup and handles a lot, but we got you out of that, right? I logged into my USDC account today. Do you find it weird that Circle is still showing Silvergate wire deposit instructions? Well, Silvergate's, they haven't been shut down, have they? I don't think Silvergate's actually shut down yet. So as long as they're not shut down, I mean, the Fed's bank term program they could access that. Or I think immediately they were backstopped by the Fed there, emergency powers, right? So I mean, they're still in business, I think, aren't they? Am I wrong? Somebody help me out here. Let me see what it says. It announced Wednesday, okay, that it's ending operations and liquidating its Silvergate. This was back on March 8th. It said this, sending its stock price plummeting following months-long. Yeah, kind of interesting. That is kind of interesting. Yeah. I don't know. Maybe they're just being lazy. Haven't got around to it yet. I mean, if they're still in business, they're still in business. Circle's got to find somebody else to run wire deposits through now. So there's still that, right? Coming out as an indicator soon. Oh, are you talking about, you think cup and shoulders are my fave, he says. All right. So anyway, right now we'll see if there's follow through on this pullback here, right? Now what could happen? If Bitcoin does that rally through 30,000, and ends up getting toward that 45, I mean, we can see an overextension. I may have to come back in here and even just redo the count, right? If I'm looking at this right now, if I'm honest, I mean, I could see this as a 1-2 here, and this is a 1-2 working on a 3 of 3, right? So it goes 1-2. We're working on 3 instead of 3 being right here, right? So this would just be interior wave 1 and 2 of circle 3. So that's still possible. Take us out above wave 4 and take us on up. Let me see here. Look at that. We have weekly candle there. Last week's candle on off that weekly pivot. But again, if we do, I mean, you've got that same kind of thing more or less for Bitcoin minus the 30,000 area. So yeah, I could see dominance kind of drill on up. But I'm not telling you it has to. Right now, we've hit my initial targets, which are going to be running it through the 5 pivots, the 5 resistant pivots there on the daily. That takes you right here through the R1 pivot on the weekly. Again, this could be one and done, 2 back to that 42 or 43.42 area and then rallying up higher. So we'll have to see how it plays out. Cup and shoulders is bullish. Head and shoulders are bearish. Oh my gosh. Fibbo says he's more privy to head and handles. So I can't say anything around here with you guys. You guys are ridiculous. Anyway, all right. So, again, that's what I'm looking at in terms of what we've got here. Again, yes. Am I kind of on the fence right here? Yeah. There's nothing happened yet that says, whether it's by dominance or whether it's by, Bitcoin here that says I have to, that we have to drop it down, right? There's nothing that says it has to, right? And as a matter of fact, it's continuing to nearly break out higher right now. The uptrend is significantly bullish off the lows, right? So we'll see what happens as it gets more into this resistance here at that 30,000 area. Okay. But again, generally, when it comes to pivots, when we're getting this breakout, right, this impulsive breakout above the weekly pivot, generally that leads us to a rally up to the R1. So right now, it's kind of where I'm looking, right? I also mentioned previously, I posted a chart there talking about when we had this rally here and everybody said it had to come down. And I was pointing out the fact that we had this pin bar right there with the large lower wick there, right on support. This is the POC here of that rally down, right? I think I've got it pulled all the way over now. Let's see. Yeah, there we go. Right there. So you're getting after a large rally, you're getting a 3-wave pullback with this huge pin bar with a large lower wick right at support. I mean, those are trades you take, guys. Those are higher confidence trades. I mean, there's no two ways to say it, right? Remember when we had this daily candle, where's that daily candle? We had this daily candle right here. Remember, everybody told you it had to go down, right? They said, it has to go down. Look at the candle. It's definitely going down now, right? And I said, no, I said, if it's not going to get any follow through here and it pops up higher, this should be a more bullish event, kind of like what we saw down here on the weekly. Remember, I posted this there on Twitter, right? we had this. At this time, I told you, we'll look for a little pullback because generally this is a really bearish candle and we would expect follow through down to a new low. But if you don't get that follow through, if you just get a little dip here and it breaks out above it, it's going to be significantly bullish. That's what we got. Looking at that same kind of thing where we are on that daily, right? So that's where we had this right here pointing to all this stuff, right? Meanwhile, everybody else is screaming at you that it has to go down. I understand why, but just they weren't correct, right? Price is only going to do what it's going to do, guys. It does not have to do whatever you think you want it to do. All right? Does that make sense? Let me see here. So there we go. We're getting that rally up and out through there. It wants to break that high. That high is up there at 28,578.63 cents. Okay. Hank says rejection here is too logical. Yeah, it's where everybody's looking, right? And the market, well, there we go. Popped out above it, looks like. The market tends to punish people who are too off sides, okay? Now, the first time I said that really significantly, guys, was I'd said it a few times before, but I really pushed the narrative there in 2021 in January when the DXY was down at its lows, right? And I said, I pointed out that the market generally was about 96% short, right? 94% short, using an indicator I was talking about. And I said, the market tends to punish participants when they're that far off sides, right? When they're significantly off sides. So we kind of get up to this area and everybody says, oh, it has to be short. Everybody's taking profits. Everybody's shorting. And so if it pops up, guess what? All of a sudden, again, more max pain, right? Because you know how y'all get. You don't get excited that you made profits. If price continues going higher, you get upset, right? So here we are. We're down at the hourly S1 pivot now on the DXY. Got a bit of a bullish engulfing candle printing there on the hourly. Trying to break out of Stochastic RSI oversold. Hourly never actually hit oversold though, so I'm kind of watching this. We do have, again. Well, do we have lower lows? No, we actually do have, looks like maybe slightly higher lows here. A bit of bullish divergence, it looks like, coming off the swing low to this swing low. But overall, targets upside. Look at the daily pivot right around 103.71. And then the hourly pivot, weekly pivot kind of confluence area there at 1.04 or 104.14 to 104.295. Those would be the targets I'd watch. Expectations that they get rejected, one of those, and continues down lower. Local wave 3 target right around 101.218 right now. If we look at the daily, again, just look at the daily. It dropped on down through the daily pivot here. We've hit we've hit the pocket of demand here in these wicks right on the daily. Daily S1 pivot coming up. But, unless something goes wild tomorrow with, and by the way, it's going to be volatile probably tomorrow when the FOMC comes out. So if you don't want to stomach all that, go ahead and get out of your trades, an hour prior. But, I could see some whipsaw action where this actually hits the S1 pivot and pops back up. But, coming off here, we're looking at 1, 2, potentially 3 coming down. And that's that 101.218 target there. Usually you're going to get a 5-way. Again, the same way as we look it up, the initial subwave hits targets a little bit below, a little bit above whatever the previous swing high. Same thing on the way down. Your first subwave hits the previous swing low area. So we generally would look for 5 waves down to this area. And I think what that means is we'll rally back up with that daily pivot I think is going to come on down some, which means wherever this ends 5 waves down will probably be around the S1 pivot on the daily for next month, I believe. Don't get a case of the coulda, shoulda, woulda, Fibbo says. DXY, I think we've still got downward pressure coming in. Again, my move up here, to me, it looks like a 1, 2, 1, 2, 3, 4, 5. So basically, A, B, C. This was wave 4 on the way down. So wave 2 generally targets wave 4 area. Here we are a little bit above it. So again, counts look like it wants to continue lower. So we'll see if it continues lower there, right? Anybody been watching gold? Gold had a little bumpy bump yesterday. Broke out right above 2,000 there. Hit $2,014.90. And of course, pulling back in three waves right now, hitting the initial target area, which is this hourly and pivot, daily R1 pivot confluence area. But it's still, it is in three waves, it appears. We've got a reset here on the 4-hour Stochh RSI, down and oversold. We do have bullish divergence coming off this swing low and where we are right now. Higher lows in price, lower lows in the oscillator on RSI. So we'll see if we can get this rally up here. If we're breaking out above 1989, not the year, the price level, that should indicate that we're going to head up higher there. Initially you're going to want to see it clear this blue supply structure EQ right around $20,000 or $2,040 to that weekly R1 pivot, which is at $20. $2,064. You want to see it clear that, and then the all-time high, guys, just a spit above right there at $20.89.20. So $2,089.20 is that all-time high. Of course, we're looking at futures here, so you're going to want to watch that. We can see right now with the volume and this drop here, we've got we got this big expansion of volume, this spike of volume on the drop. These three candles, more and more volume. Let's see here. Second candle looks like maybe a little bit bigger than the first. Yeah, a little bit bigger on bigger volume, but a lot bigger volume, so questionable. Looks like maybe slowing down. Current candle. This is the 4-hour. This candle still has another hour and 5 minutes left in it, but right now, definitely more volume than the previous one. Definitely a lot smaller right now, candle spread. So we'll see how that ends. If that can end a smaller candle spread, I'd be looking for a reason to go long. On a smaller time frame, maybe shorter time frame. So let me see here. What about Ethereum, Bitcoin? What about it, Toby? I make y'all use words here. I'm not your monkey. Okay. Anyway, I haven't looked at Ethereum, Bitcoin in a while. Let's see here. Looks like we got from last year. Yeah, so I mean, we're still range bound here. We've been range bound since about May of 21. Let me see here. If I look at this looks like 1, 2, 3, 4, 5. This looks like potentially a triangle, A, B, C, D, E. And so far we've pulled back almost 61.8 right here. We didn't actually dip down and oversold on that weekly there, which we don't have to. We don't have to on the weekly RSI. But yeah, I mean, if I'm looking at this to me looks like 1, 2, 3, 4, and 5. Oh, I got something bigger than that over here. It's the weekly. Yeah, we can go with minor. And so then that would give us then a 1, 2 potentially on that. Intermediate. Again, right here locally, this looks like an A. Maybe A, B, C, D, E. Yeah, I mean, it looks like B, C here. Now, that doesn't mean it's done dropping yet. It could still drop lower, but I mean, when we're looking at this, I just want to kind of get this in here just so it's visually easy for you guys to understand what I'm saying, in case you're not very well versed in Elliott wave. So I mean, this is kind of, if I'm looking at it here on the weekly, Yeah, this is kind of what I'm looking at. We'll zoom into the daily here in a minute. Just finished drawing this out, labeling this up. That's a pretty nice triangle overall as well. So yeah, here we're coming down. By the way, you'll notice where we hit here. Look at where we hit. You see this previous area of resistance support right here? It's kind of where we're hitting. So that's an interesting area there. Daily says we're definitely due for a bounce. It looks like it. So yeah, I mean, I'm looking for a breakout above 0.07341911. That'll confirm the count here, or it should confirm the count. Say we're heading up further. Until then, this could just be a bounce and then heading down lower. Right now, we've rallied right into this previous resistance right here at 0.065394.5 kind of area. So you've got this this supply kind of sitting up here. So if it can't break out above that, I mean, again, we're going to look down lower as we continue to play out here. Where does lower get us from here? If that's the swing high, 0.6065850 maybe. Just based on the idea that that would maybe be a fourth wave and then you have a fifth wave down. Oh, it's kind of a neat area. Look at the, you get this. I don't know if you guys can see this. Let me zoom in a bit here. So that target would give us, you see this candle over here on July 15th of 22? That's where it was rejected, right about this target area we're looking at. So that's definitely something to watch there with that. Oh my gosh. It's back over here. So yeah, I think probably still got some further movement here, just based on that weekly count. Yeah. Nonetheless, yeah, like I said, daily here, we're getting that bounce. That's what it is, right? Let me see here. Yeah, Corey, man, I'd be careful with ARB. Again, new things coming out, getting listed everywhere. Usually ends up getting a pullback initially, at least. A lot of people jump in on it because, oh my gosh, I can get in on it now, and then they, their exit liquidity for those who are already in. So yeah. Let me see here. Toby, you're welcome. Yeah. I've been watching the weekly. The weekly is my interest on that. I'm not really interested in the daily. I'm much more interested in the weekly. We've got patterns here, right? So if you look at this descending kind of wedge thing here, pattern target is right up there around 118.66620. If you look at the pattern target based on this channel height, they get you up here almost perfectly at the EQ here at this weekly supply structure EQ, right around 0.1507710. So it'll be interesting, right? It'll be interesting, but I'm definitely interested in what's going on here. You can notice that in this area, in this range, volume's gone down except for this this swing low down here. Look at that volume spike on that swing low. Demand was there. A lot of attempted selling. Demand was there. And so, again, you get the rally back up. Yeah, I want to look for a breakout above that and head up higher. I mean, just seeing that right there, that should have had people going long. Talked about that a few times. That should have had people going long. All that volume there. Do I expect Doge to surpass its previous all-time high in the next bull cycle? Is that still the case? So my thought is, my thought in general, guys, is if Bitcoin's going to continue to rally, again, as I continue to say year after year, a rising ship lifts all tides. And Bitcoin is the rising ship. It is the ship, right? Or is the rising tide lifts all ships. It's the rising tide, right? How Bitcoin goes, basically the rest of the market goes. I know there's outliers, but so my thought is if Bitcoin's going to rally to a new high, there's little reason to believe that, most alts aren't going to hit a new high as well. That's just general market, take on that. It's the idea of, okay, well, if the NASDAQ hits new all-time highs, well, I mean, most likely, most of those stocks, those tech stocks are going to do the same, right? Even though Bitcoin isn't an index, it's this idea of sentiment, right? So if the index itself is rallying, then the pieces are also interesting. If Bitcoin is not the index, but if Bitcoin's rallying, Bitcoin kind of gives you the health of the overall market, crypto market. And guys, I'm going to tell you what. And this is going to hurt some feelings, all right? But I don't believe that there's anything with all these alts other than speculation. You're going to buy them lower so you can sell them higher. Everybody wants to feed me all this now. Oh, fundamentally, they're this and they're that. They're going to do this and that. We're not at that pace yet. We're still not. We weren't in 2017 when everybody was talking about ICOs. We're not now. And I think if you can accept that and take that in as an understanding, I think it'll help your trading a lot more. Because when you start saying, oh, yeah, this coin is going to change everything, it's going to do all this, when the odds are most likely that it won't, what it does is it gives you an emotional latch on to that. And that's really difficult to trade against. So, I mean, when you look at it, basically, you have Bitcoin, you have Ethereum. Everything else really is just, even Ethereum's just an alt, right? But it's been around for a long time and it continues to grow, it continues to do its thing, right? Now, does that mean something can't become fundamentally more desirable at a later date? No, sure it can. But right now, if you're buying things because you think that fundamentally is going to do something, just look at alt charts, guys, in the last bear market. Look at them in the previous one. They all basically go back to zero. I don't care who it is, right? You guys got to stop latching all your hopes and dreams onto these things being, onto the idea that you're buying a crap coin there at $1, as Amazon, right? And holding it up to current price, right? It's not going to happen, guys. And I know that hurts some feelings. I know. I'm not trying to hurt your feelings, but I'm trying to be honest and, forthright with you guys here about the way this cryptocurrency market is. Okay? You want to make money here, guys. You don't want to get married to something. If you have to get married to anything in crypto, it's got to be Bitcoin. If everything comes crumbling down, Bitcoin should be the last man standing, even if it crumbles eventually too. Because it is the first one. It is the granddaddy. It is what everything else, it is the reason for everything else's being. Network effects, blah, 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 all these different ways you want to look at it. It's kind of what it is, all right? Nerd Minion, what's up? I appreciate you. Thank you. I don't know what I said there to earn your like, but I appreciate that. Again, guys, I don't go out here. I never push anything. I talk about charts and my thoughts about overall markets. I've been doing this publicly for 5 years. Lost the first few years of videos when YouTube cut me off midstream and killed my channel when the crypto crash, when they were killing off all the crypto channels. I survived the first one. I think I got hit with the second one. Was down for about 5 or 6 months. And actually had a member of TWC actually run into somebody who worked at YouTube, and they connected me, and that person was able to find out. They're like, yeah, you should never have been taken down. Got me put up that day. I was like, are you kidding me? I had sent so many things into YouTube, complaints and, all this stuff that I had to, following their lines, never heard anything from them. It was crazy. My truth about alts is what did it, Nerd Minion? Well, I appreciate it. Yeah. I mean, it is what it is. It doesn't mean you can't make money in it, guys. But again, I think if you take that understanding to heart, it's going to help you lose less and potentially win more, lock in more profits. Because most young traders, young traders, I mean newer traders, right? They tend to get really emotionally attached to it. And that makes it hard to do anything different with it, right? Let's see what's going on with our stocks now. Let me see here. Oh, let me see here. Qs. Let's see what the Qs are doing right now, guys. Technology, right? Look at them. Let me kind of I've got my idea of where I was looking at them here. Again, potentially you're breaking out impulsively above the pivot, potentially rallying up to the R1 pivot. But, as with most of these, as I've been talking about, it's this, you have to get above this mid-August swing high here. So your indexes, NASDAQ, E-minis for S&P, or, just the S&P, Dow, all that stuff, right? The Qs here, you got to get above that mid-August swing high, because that says, okay, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, or I guess 1, 2, 3, 4, 5. So, ABC, you break out above that, that says this is corrective. Now, there's different options from that. I've talked about it before, but it means that if it's corrective, ultimately we should be looking at a new all-time high before we're really done. The Dow has broken out above its mid-August swing high here. It's locked in the 3 waves down. We're just waiting for everybody else to kind of jump on board and do it, right? So, yeah. Gotta move this out of the way there. Let's see here. So if this is maybe... there's 2 ways to look at this. I'm not going to look at it because I got to go here soon. But it's either 1, 2, 3, 4, 5. So that becomes a 1, 2. Or it's 1, 2, 3, 4, 5 coming up. Overall, we should be looking for it to rally up through the R1 pivot here to get that movement. Is that a 50% pullback? Yeah, it's 50% right there. So if that is actually a 1, 2 there going up, then that would have us 5 waves up to 390 up here. And then that would be this 1, 2, 3. So you'd have this overextended interior wave 3. Gives us a 9 yeah, probably. This wave 3 here gives you an overextended wave, larger wave 3, right? 1, 2, 3 heading up. So yeah, they give us 3 right there. 2, 3, 4, 5. So yeah, 5 up there around 390. So that'd be 1, 2, 3 up there around 390. 4 would pull back, and then 5 up. 4 would pull back right to that blue, it looks like. 38.2 right there, yeah. So the idea here, just draw this real quick, would be 1, 2, if this works out, right? 3, 4, and then we'll look for a 5 breaking out. Not sure how high to go there. I was a little bit, well, I don't know. I was almost right. Right there around 417.98. So you get your first subwave, terminates right around where the previous swing high was. So same kind of thing we're looking at generally as far as the indexes go as well. Let me see here. Profits maximalist, Corey says. I agree. Christopher H., how are you doing, man? Good to see you here. Let's see. We kind of catch up with you here. Hank says Alt is trading Bitcoin on steroids, up and down. Okay, yeah. JCC, what's up, man? He says sometimes just knowing someone that knows someone. Yeah, for the YouTube thing, that really worked, man. It's been crazy, right? That whole situation was just stupid. Middle of the stream, guys, they just cut me off. Channel everything. I was like, wait, what? And they're like, oh, well, if you think we did something, if you think this was wrong, you need to go ahead and submit this right here and this and this. Did it so many times, never heard anything. It was crazy. Such stupid time. That's why I went on Twitch. That's why I'm doing there now. Anyway, so I don't know, guys. I think that's probably where we can end this. We kind of looked at some charts here, look at what we're doing. What's Bitcoin doing? Bitcoin find a little rejection here. So we can notice on the 1 hour that it just crossed bullishly on Stochastic RSI, breaking out into overbought. Let me see here. We had some volume coming on that rally to just pop out above the top there. I've seen people draw the idea that this is a wedge. Okay. Off here. If it is, again, the idea that this is a 1-2 on the wedge, right? Which is where I've got my 1-2 as well, right? But here's the thing. This is 1-2, this is 1-2, 3, 4, 5, right? So 1-2, 3, 4, 5. And then again, we're going 1-2, 3, 4, 5, and then 1-2, 3, 4, 5. However we're going to do that, right? The important thing to note is that wedge, that diagonal is 5-wave structures, 5-3, 5-3, 5. And according to Elliott wave, that has to be a leading diagonal. So even if this turns out to just be a leading diagonal here, all you're going to get is a pullback before you break out higher. This isn't something that you go down and you break down below 19,600 or whatever. If this was ABCs, so ABC 1, 2, ABC 3, 4, ABC 5, if you can get that, then that would suggest that's an ending diagonal. But again, the idea is this is 5 waves up off the low here, right? So, I mean, maybe, but things seem to be saying, until otherwise, things seem to be saying higher. So, you kind of play what you're working with. We got to look at the 15-minute here. What do we got in the 15-minute? Let's see. We got 1, 2. We got 1, 2, 3, 4, 5. So 1, 2, 3, 4. 1, 2, 3, 4, 5. It gives us 1. ABC gives us 2. So yeah, we'll see if we can get some pullback here to rally up higher, but seems to fit so far. So we'll continue watching. Again, the pullback targets are what they are, but until we're actually hitting them, I mean, there's no reason not to continue looking higher, right? Again, nothing has actually happened yet that suggests that we're going to pull back, much less go to new lows. Okay, guys? Nothing is going to happen up here. There is no level that you're going to break down up here that should even have you thinking about new lows. That's real talk, okay? I don't care what your favorite person, influencer, whatever online tells you. There is a lot of work to be done getting through all this before you even get down all the way down here to these lows. There is nothing. There is no level here that you're going to break down below that's going to tell you that you're going to new lows. Okay? Just so you guys understand that. Hopefully it makes sense, guys, right? Let me see here. So yeah, so I think that probably is where it is. Like I said, expect volatility tomorrow. Okay. Usually the volatility kicks in about an hour prior. I'm really not trading a whole lot right now, guys. Because markets are looking like they're either getting ready to pull back. The bigger picture as we're seeing, Bitcoin and everything, or getting potentially ready to break out higher. So I've got my long Bitcoin position I'm in right now. That is the only trade I'm really looking at. I might take some shorter term Forex trades if I can find them. But, the DXY doing what it's doing with this whole overlapping, dropping down, continual thing doesn't make it really conducive unless you're on the really, really short time frames. So you can't set something up really. So I'm just kind of waiting to see what happens with, the markets, their knee-jerk reaction to whatever Powell says tomorrow. First to the rate hike potential or whatnot's going there, and then second to what he says at the presser afterward. Okay, guys? So that's what I'm looking at. Yeah. So there it goes. Just expect volatility, guys. And that volatility can be quick, hard, and can take you out of a position really fast. So I generally tend to stay out of the markets when these kind of news events happen. It's just not worth it to me. It's the stress just isn't worth it, guys. Somebody's been doing this as long as I have. I'm just telling you, it's going to drive you nuts after a while, guys. Okay. Corey says it's crazy. What'd you say here? It's crazy to think that people trade literally every sentence Powell says. That's the epitome of a lack of emotional control. Yeah, it's crazy. It's crazy. But people do. People think that they're going to get rich trading news events, guys. I'm telling you, it's not worth the hassle. You got to make sure the juice is worth the squeeze, right? We're not really getting that there. I don't believe. I've never believed that. Okay, so I'm always watching that. So anyway, there it is, guys. As always, I hope you guys have an amazing day, amazing week. The only thing you control in the market is how much you lose. That's it. Just how much you lose. So risk management to this day, still the most important thing that I do. If that tells you anything about your trading life, it should be the most important thing you guys do. You always look for the holy grail, right? You always look for that trading system or that thing that's going to tell you where these targets are, right? The holy grail of trading is proper risk management. Once you guys figure that out, you're going to be so much further ahead than most traders. But getting there, figuring it out, accepting that, internalizing that, living that is a lot more difficult, right? All right. So listen, guys, you can join us at howtotradetowin.com, okay? We'd love to have you there. I've got the new website almost done. We ran into an issue with videos uploading, and their customer support is they had so many onboarding new customers, the back-end provider did over the last few months, that their support is slow. So finally got that figured out last night. So just be watching for me to let you guys know when that is. That I'm going to do something special for everybody as soon as we can launch that, okay? And so I'll give you the website. Well, I'll go ahead and redirect howtotradetowin.com and texaswestcapital.com to it. That way you guys can get there, okay? All right. I hope you guys have an amazing week. Trade safe. If you're in Discord, I'll see you guys over there in a bit. If not, I'll see you guys hopefully next Friday, this coming Friday, 11 a.m. Central Standard Time. All right? All right. Take care, everybody.